Crude futures are attempting to bounce back here today. We did see them down initially this morning. We saw a low of 66.19 for the day. Now the weekly low was 65.74, so we did not take out the weekly low to this point. We are seeing crude trying to rally here at the end of the week. We're seeing it currently trading around the 67.60 level, so up slightly on the day, but that's still down 2.4% for the week. And that's on the heels of what appears to be a third weekly decline in the crude futures. Looking at activity on those crude futures, there's some significant volume taking place here. We're seeing a lot of activity as we continue to see the volatility in the equity markets persist and roll into other asset classes. And now we're seeing a significant pickup in the futures volume here at the CME. When you look at Tuesday's highlighted volume spike of 827,000 contracts traded on Tuesday, but the average weekly volume to this point is around 659,000 on average. That's a big increase over previous weeks. And today we're currently running around 550,000 futures traded today so far. So again, we're still seeing elevated activity as we see crude gyrate around here, given all the geopolitical turmoil that it's dealing with. Looking at market dynamics moving into next week, there's a few things I want to point out. One thing that's very interesting, a storyline that came out today, I believe it came from Reuters, is there's an interesting dynamic taking place with Mexico and Venezuela in the crude space. Now, they are actually exporting oil that was initially earmarked for domestic use and shipping it out to the United States for cash. There's some concerns there that they might not be able to meet some debt obligations, so you're seeing both Mexico and Venezuela kind of trapped here and exporting what initially was designated for domestic use to the U.S. to try to raise some cash balances. Also, you're looking at transportation costs in the crude market, just in general, continuing to push, particularly when you look at the WTI contract. You're seeing that being pushed around, I believe, by the transportation cost. Doesn't get a lot of talking points, but again, what's going on? The pipelines are full. It's expensive to store crude, and again, that's why I think you're seeing the disparity between WTI and Brent continue to stay as wide as it is. Also, OPEC is in play moving into next week, has been very instrumental in moving the markets this week. They indicated that actually they might not ramp up supply to the point where they had initially indicated just earlier in the week. Now they're seeing what they feel is going to be oversupply. So even though we have an Iranian oil coming out of the markets, the fact of the matter is that OPEC is seeing that this is not going to cause too much of an increase in supply as an overall factor because they see demand coming down in 2019. So that's a dynamic the market's trying to digest as well. And finally, equity market volatility. We're seeing, again, the equity market's very volatile here today. We saw the S&P futures down as many as 70 handles at one time today. So again, some serious equity volatility that's persisting and leading into the volatility I believe that we're seeing in the energy space as well.